Good morning and thank you for joining us. Today we're joined by Stephen Hall, CEO of NH3 Clean Energy, who will provide a brief update on the WAH2 project, including recent developments following the joint development agreement for ammonia bunkering and the CCS MOU with Angel CCS. You're in listen mode only, but feel free to drop any questions into the chat box and we'll address them at the end of the presentation. Stephen, over to you.
Thank you, Simon. Good morning, everybody. Welcome to the webinar, and thanks for making time to tune in. The last webinar we held was in February when we publicised the results of our pre-feed. What I'm going to do now is provide you with an update on the progress we've made since then and the implications of that progress. I'll start just by drawing your attention to our standard disclaimer. I should also say that these slides are available on our website, and later today the recording of the webinar will also be available. WAH2 is the leading clean ammonia project in Australia, and it really comes down to 5 reasons. And that's what I really want to talk about to begin with. First of all, globally competitive supply. We're providing a product that customers can afford. In terms of execution, we have a clear plan to de-risk project execution, and that's all about keeping things simple and using existing infrastructure and skills wherever possible. Thirdly, our timing is right. We're an early mover, but we've got feed entry planned in the next few months, which will lead to production in 2029. And we offer compelling investment returns. The base case, and I'll give you some numbers later, the base case has robust economics. We've got clearly identified improvement opportunities above that, and then phase 2 of the project offers substantial growth in the medium term. And finally, we're aligned with international, domestic and community interests. And that means that we have a broad base of support because we're ticking a lot of boxes for a lot of people. So decarbonising gas, helping to establish Australia as a clean energy exporter, and providing significant community benefits through the provision of new infrastructure and jobs. Over the last, probably year or so, a lot of hydrogen projects have fallen away, and I'm increasingly getting asked, how come in that environment you're continuing to build momentum for the WAH2 project? And in answering that question, it really comes down to these 2 things. So firstly, it's about balancing significant emissions reduction with commercial viability. So in talking to our customers, it's very clear that what customers want is something, a product, that is clean and affordable, not zero emissions and unaffordable. And so with that clarity, we've been focused on, okay, how do we produce ammonia that is both clean and affordable? And the way that we do that is we've chosen to use existing proven technology, which allows us a significantly lower production cost and no technology risk. So we're confident of delivering at the cost that we think. Secondly, it's about securing a location that is close to all the things that we need and opens up the opportunity for shared infrastructure. And that, of course, helps us drive down our costs. So clean but not zero emissions, affordable because of these steps that we've taken. And of course, the other aspect of building momentum is making decisions to move forward in an uncertain environment. And that's something that some people seem to struggle with. The way that we've been doing that is we've been consciously establishing partnerships very early in the process so that we can work together to manage the evolving environment. And that's proven extremely successful to date, and we expect that to continue. Secondly, it's about fixing the design of our plant, because that's what you need if you're going to have a successful feed. You need a very clear view of what you're designing. But that fixed design preserves emissions flexibility. That's important because it allows us to adjust our emissions during operations depending on how customer preferences or the regulatory environment evolves. And then there are two things that we're doing that are related to the market. One of those is we're spreading our market risk. So we're actually focusing on two markets. One is displacing coal in power generation in places like Japan and Korea. And the other is displacing fuel oil and diesel for marine transport. So we've spread our market risk and we're looking at these two markets. The other way that we make sure that our investment lines up with market demand is taking a phased approach to the project. So phase one initially, and then phase two will be executed as soon as the market is sufficient to justify that. We've conservatively assumed that's 5 years after phase one. I'd like to talk a little bit more about the market now. Now, the next couple of slides are focused on the marine market. That's not because we're not interested in power gen. It's because in the last 3 months, there have been some very significant developments in the marine market that are very helpful for us as a project. And I wanted to explain why that was the case. So, the headline, I guess, is clean ammonia is emerging as the front runner to decarbonize heavy shipping. And it's the International Maritime Organization, the IMO, that is driving this change. They have set international mandatory targets for decarbonization, and those targets get tighter with time. And so that's what the left-hand chart shows. It shows the tightening requirements in the orange and red lines of the IMO's emission reduction requirement. And so the way this works is if you are the owner of a ship, for any emissions above that orange line, or between that orange line and the red line, you have to pay a US $100 a ton. For any emissions above the red line, you have to pay US $380 a ton. And you can see from the two dotted lines near the top that heavy fuel oil, the current dominant fuel, and LNG is a slightly lower carbon fuel, that they're basically exposed to these additional costs of $100 and $380 a ton, either straight away from 2028, which is when these targets come into force, or pretty soon afterwards in the 2030s. And so the IMO regulation targets, they've set the targets, they've defined these penalties, but there are also credits, and that's where this gets really interesting. So clean ammonia, the product that we're offering, has an emissions profile down where that blue line is on the left. So we're significantly below even the orange line. And what that means is that if a ship is using clean ammonia, not only does it avoid the red $380 a ton, the orange $100 a ton, but you actually get credits for how far below that orange line you are. So it's quite a complicated equation, But when you take all of this into account, it becomes clear that clean ammonia is now going to be competitive with conventional fuels. And the chart on the right-hand side shows the total cost of ownership of the different fuel types. And the important point to note here is that that turquoise line at basically the bottom of the stack, that is using a clean ammonia in an ammonia dual-fueled engine. And so you can see, this is why ammonia is increasingly seen as the best option for dry bulk shipping. And dry bulk shipping is important for us because that's what iron ore export is. What's really exciting from our point of view is that there's a significant demand for ammonia as a marine fuel being forecast for the Pilbara. Now, the reason for that, if we focus on the left-hand side, is that the Pilbara-Asia iron ore trade it's a leading global trade route. Over 750 million tons of iron ore were exported in the last financial year. What that means is an awful lot of ships use that route, and an awful lot of emissions are associated with that route. Now, this chart on the left shows the forecast demand for ammonia as a marine fuel in the Pilbara. And you can see that it shows about 500,000 tons required by 2029, rising to 1 million tons by around 2032. So the full production capacity of our plant, 650,000 tons for phase one, would be required or could be consumed by this demand as early as 2030. What's very interesting is that by 2030, the demand is potentially enough for all of our phase one production. It would actually only take 16 bulk carriers, so 16, to choose to use ammonia as a fuel. And if they chose only to bunker at the Pilbara end, they would actually require that amount of fuel, that's 600,000 tons. Now, 16 is not a large number of ships when you consider that the trade route as a whole employs the equivalent of 300 full-time ships. And the chart on the right shows that the current order book for bulk carriers that are ammonia capable is actually 29. So we need 16 ships. 29 ships are already on order, and there's a similar number that have been announced, but the orders haven't actually been placed yet. I'm now going to just turn back to WAH2, the project, and I'd like to start by reminding you of where we're located and the advantages that offers. So this map shows our site in the Maitland Strategic Industrial Area. The fact that we are close to everything that we need, and that's sort of noted on the chart. But in particular, this site enables the lowest cost access to existing infrastructure and established providers. And in particular, the most important of those are existing port facilities at the Port of Dampier, existing water infrastructure owned and operated by the Water Corporation, and carbon capture and storage, which of course is a critical element of our project. And we're delivering the project in collaboration with leading players across the value chain. Now, A lot of the information on this slide you've seen before. It's a summary of the commercial agreements that we've entered into over the last 18 months as we move the project forward. But there's two very significant additions to this slide that I'm delighted to sort of introduce, as it were. And the first of those is CO2 sequestration. I'm delighted that in the last couple of weeks we've executed an MOU for CCS with the Woodside-led Angel joint venture. The significance of this is that it's the final piece of the jigsaw in terms of the inputs and services that we need to supply the clean ammonia. So it's building on our allocation of land, our agreements around gas supply, water supply, CO2 transport, and port access. And so now we have all of those supply elements covered, if you like. The second agreement I'd like to flag is the joint development agreement that we announced at the beginning of this week. And that's a joint development agreement with the Pilbara Ports Authority and Oceania Marine. So that's building on MOUs we had with each of those parties. But the purpose of this joint development agreement, it's really about recognition of the scale and importance of that marine bunkering opportunity I was alluding to earlier. And it formalizes the commitment of the three organizations to work together on an integrated plan to make this a reality. You know? And the implication of this is it's a significant step towards securing offtake. So the results of pre-feed and these commercial agreements have confirmed that we can offer globally competitive ammonia supply for power generation. I mean, and just to walk through it, we can supply at a cost of about $600 a ton FOB. Feedback from the data room we've been running has confirmed that is globally competitive. In addition to that, Australia provides a very low geopolitical risk relative to the key alternatives, the Middle East, also the US, where there's increasing uncertainty related to the current regime. And of course, the shipping routes are secure. We're not relying on the bottlenecks of the Panama or Suez canals or unstable areas such as the Gulf. But also, we have a significant shipping advantage in terms of distance to the markets of Korea and Japan. And the chart on the bottom left shows that. So the cost of shipping ammonia from where we are to Japan is about half the cost of shipping from the Middle East and about a third of the cost of shipping from the US Gulf Coast. And just to put that into perspective, the differential between the Gulf Coast and ourselves, it's about $90 a ton of ammonia. That's the shipping advantage that we have. The bar you can hardly see on the far right of that graph is showing the shipping cost of getting our ammonia to our bunkering in Dampier. And that's part of the beauty of the opportunity. There is no shipping cost. The other piece of feedback we've had from customers is that their other sources of supply would be linked to either Henry Hub pricing or oil pricing. And the chart on the bottom right shows that, and this is over the last sort of 25 years, which is sort of the lifetime of our project, let's say, you can see just how volatile each of those markers has been. And yet what we're offering is a fixed price with escalation, and that avoids this volatility. And so the buyers are saying that they see significant value in having a tranche of their supply with this very low volatility. Now, while we're globally competitive in terms of supplying the power gen market, we're actually globally unique in terms of supply for the marine bunkering. And the reason for that is really what I'm trying to cover in this slide. So first of all, there are no vessel diversions necessary. And that's because we have this unique location. Why are we unique? Well, we're the only location that's at the hub of this iron ore export route. So all of the iron ore gets picked up at the Pilbara, and then the ships go to various parts of Asia to deliver and then come back to the Pilbara. So it's that position at the hub. If we can supply bunker fuel in the Pilbara, it avoids the need for iron ore carriers to take a diversion to, say, Singapore. And that's what the two maps show. And you can see that it's a significantly longer distance if the ore carrier has to divert to Singapore. And to give you an idea, that's about 2.5 days. So that costs time, it costs money, and it increases emissions. And then the final point about our location is because we're manufacturing so close to the port, effectively, the ammonia goes straight from manufacture into the bunker vessel without the need for any other transport. What we're offering is significantly lower emissions than the status quo. And so the top right chart, the left-hand bar is the emissions associated with heavy fuel bunkering in Singapore, which is effectively the status quo. The far right blue bar is the emissions profile associated with bunkering clean ammonia in the Pilbara. And so that you can see that we're actually, it's less than 1/4 of the emissions. So we're saving over 3/4 of the emissions related to the status quo. What's also interesting is that if you look at the two right-hand bars, you'll see that even if a vessel chose to bunker clean ammonia in Singapore, we offer significantly lower emissions than they would because we don't have that transport cost to get the ammonia to the bunker vessel. And our plans for delivery of the ammonia bunkering business are well advanced. We've spoken already about the joint development agreement. You're already aware that pre-feed is complete in terms of ammonia supply. Oceania have a bunker vessel design and are extremely close to having in-principle certification by one of the classification agencies for that design. And last year, the Pilbara Port Authority and others demonstrated ship-to-ship transfer of ammonia in Dampier waters. So things are moving forward at pace. Let's talk now about value. So the pre-feed work that we did validates that we've got compelling project economics. And to give you some numbers, in the base case, we're close to $500,000 NPV. And that NPV is robust to downsides. So against all the sensitivities that we tested, shown in the tornado below, the value remains positive. We also have a suite of infrastructure-related improvement opportunities and financing opportunities that mean that we think we can lift the value of phase one to over $650 million, and that's our target, that middle phase one geared base case. Phase two has the potential to significantly offer significant growth and lifts value to over $1.1 billion. The value lever that's not so clear in this chart is the timing of phase 2. So at the moment, we're assuming that phase 2 happens 5 years after phase 1, but there's no reason at all why it couldn't happen earlier. It could happen 2 years after phase 1 if the market built up. And the way that the marine market appears to be heading, we're increasingly optimistic that phase 2 can be brought forward. And of course, bringing forward phase 2 significantly increases the value of phase 2. However, when you compare these values with our share price, we see a growing disconnect. And what the chart shows is our share price over the last 2.5 years, and annotated, and you can see that there's an upward trajectory. But I think it's also fair to say that when you look at all of the value enhancement and de-risking activities that have occurred, which is annotated on the chart, that the value of the company does not yet reflect that increased and de-risked value of the project. And in my view, this disconnect is sort of increasingly unsustainable, and I'm expecting revaluation as we continue to progress the project. And finally, I'd like to talk about the way forward. With pre-FEED completed, our focus is on these 3 things: execution of FEED, financing, and offtake. And I'll talk a little bit about each of those. So in terms of FEED, we're focused on executing the plan that we have for technical scope. So we have a detailed plan in place. The next activities on the ground are surveys commencing in the 3rd quarter of this year, engineering very quickly thereafter. Maturing the infrastructure opportunities that I mentioned earlier, and they're being progressed in collaboration with a variety of counterparties, and we're also engaged with the state government with respect to some of those. Talking about government engagement, we continue to progress inclusion of our project in the state government's lead agency framework. The significance of that is it will really help approvals. We have ongoing engagement with the government around potential government-funded multi-user infrastructure. Now, that's not reflected in the economics I showed earlier, but it's reasonable to assume that if the government is paying for infrastructure, that will reduce the cost of our project, and would therefore improve the economics. And we also expect to have deeper engagement with the government on the whole Dampier bunkering opportunity following our JDA, given the significance of the opportunity it offers for Western Australia. And last, but by absolutely no means least, we're advancing all of those commercial agreements that we already have. And so that's around, gas supply, water supply, CO2 transport, sequestration, port access, all of those agreements. We're moving forward from the preliminary agreements so that we have binding agreements to support FID towards the end of next year. In terms of financing, there are 2 chunks of financing that we're looking at. The first is financing for FEED. And we're talking there with a variety of entities, trading houses, and that's around offtake and structured financing alternatives. And there's some interesting constructs coming out of that. Infrastructure and energy funds, and that's around hybrid and equity solutions. And then offtake and equity interest solutions with potential strategic partners. We've also started early engagement around project financing, and the purpose of that is really to make sure that our assumptions are appropriate, to start building those relationships, but also to make sure that the work that we undertake during FEED and the contracts that we enter during FEED don't make project financing any harder than it needs to be, or make it more complicated than it needs to be. And here we're talking to advisors, including the investment bank, the boutique finance advisory, again, strategic partners and energy and infrastructure funds. Finally, I'd just like to talk about advancing sales and offtake, because that's, if you like, the last thing we need before we move forward with the project. And in terms of the two markets, on power gen, we're talking to trading houses. We've got term sheets bouncing around between ourselves and several counterparties, which would combine offtake and feed financing. In terms of strategic partners, we're progressing an MOU with an Asian conglomerate, and that's around supply of clean ammonia for their domestic power generation. So it's in the Asian country, it's not domestic in Australia. In terms of bunkering, again, there's similar conversations with trading houses, but also we're talking to shipping and mining companies that are seeking to secure clean fuel for their operations. And so, similar to the other agreements that we already have, the initial agreements around sales and offtake will be non-binding, and then they will be matured to binding commitments to support FID. So back to where we started. WAH2, the leading clean ammonia project in Australia. We're globally competitive, we're uniquely positioned, and we're the most advanced commercial scale project in Australia. Thanks for your time, and I'm very happy to hand over to Simon for questions.
Thanks, Stephen. Great overview. Just a reminder that if you've got any questions, please type them into the chat and we'll work through them. I've had quite a few actually come through as you were chatting there, Stephen, and I might even start the first question with a bit of a plug, which will lead into a question. So next week, you're at an ammonia conference, you're speaking at an ammonia conference, and that conference happens to have the WA Minister for Energy and Decarb. Do you think that that might imply that you're going to get preferred project status soon? What's the likelihood of formal government support? That's sort of all grouped into one there.
Okay, so we have been having engagement with state government over the last few months, and we're very pleased that, and as part of that, we've obviously explained what we're doing and the importance of the opportunities we're dealing with. As a result of those conversations, yes, Minister Sanderson is speaking at the ammonia conference next week in Perth. I think that's we really welcome that. It's a clear sign, I think, of the support of the Western Australian government for the role of clean ammonia. I'm sorry, was there a second question?
No, that was all. We were just looking at, wanting to know a bit about government support and things like that. So obviously,
well, I think it's fair to say that government support is building.
All right, thank you. Do we have competitors as a supply source for the bunkering?
Do we have competitors?
Competitors.
Okay. Not really. That is the absolute beauty of the opportunity. So there is no other location that is at the hub of the trade route, and there is no other provider of commercial scale clean ammonia in the Pilbara to support the Dampier operations. And as I said, we're in this unique position where our ammonia is already going to the bulk liquids wharf at Dampier, where it will either get loaded onto a gas carrier to go to Japan or Korea, or it will get loaded onto the bunker vessel. So it couldn't be a more efficient supply chain. And just to contrast that, the competition for that route is really probably Singapore. So Singapore, does have aspirations to become a clean ammonia bunker. But if you think about what that looks like, the ships would have to take that 2.5 day detour, which costs them time, money, and emissions. But also, how does Singapore get the ammonia? They either have to buy it from us, or from the Middle East, or from the Gulf Coast, ship it to Singapore, build a storage tank in Singapore so that they can put the ammonia in the storage tank, and then take the ammonia out of the storage tank and put it into a bunker vessel so that the bunker vessel can then supply the iron ore carrier. So it's a pretty convoluted supply chain by comparison.
Absolutely. What is your estimated carbon emission per kilogram of H2 produced?
I'll give you the number in tons of ammonia produced. So our base case is 0.38 kilograms of CO2 equivalent per kilogram of ammonia. I mentioned that we have flexibility to reduce that, and we can do that by altering the mix, the composition of the gas we use for power generation. We can actually get that emission down as low as 0.1. So from 0.38 to 0.1. The consequence of that, though, is that we would produce less ammonia, so it would have to cost more. And that really goes to this pragmatism. Do you want something very, very, very low, or and more expensive, or do you want something that's demonstrably clean, exceeds the requirements, and is much more affordable? And I say the feedback we're getting from customers is, please, can we have something that's clean and affordable, not perfect and unaffordable?
All right, excellent answer, Stephen. The next one I've got here, are the big players in the iron ore export trade showing any interest in joining the Pilbara Ports Oceania NH3 collaboration?
I can't comment specifically on that. What I can say is that we are absolutely, we've been engaged with the miners, and I think we all know who they are, around decarbonising their shipping. The miners all have internal targets for decarbonising their emissions, but irrespective of what their internal targets are, these IMO regulations will apply. So those regulations are going to apply to the iron ore miners as they ship their product to customers.
Okay, thank you. This next one's probably one you can't answer, but I'm going to ask it anyway. Why isn't Woodside building this project, given their now significant involvement in the clean ammonia segment and their assets nearby, including the CCS?
Well, I can't answer that. I mean, what I would say is Woodside clearly does see value in the gas-based clean ammonia concept and the markets. Their investment in the OCI project in the US, it's a significant investment in terms of capital, but it was also the same technology, the same concept of third-party CCS, and exactly the same markets that we're focusing on. So they clearly see that. I mean, I guess there's a question for Woodside about what are their priorities in Australia. And they've got existing assets that they need to also focus on.
All right, thank you. Has the feed contractor been finalised? Could you share whom it's going to be, if possible? Are they the same as the pre-FEED contractors or different?
We haven't signed a contract yet, but we value the relationship that we have with Petrofac, and so far it has been extremely productive and constructive.
All right, the next one. What is the current status of the ammonia supply infrastructure that is required to be built out to the port of Dampier? When will the government decide to allocate funding for an ammonia supply line? It's probably a bit hard, but the first bit might be all right.
Yeah, I need to try and be careful here because I'm not exactly, what's in the public domain. But the state and federal governments each put 70 million towards Pilbara Hydrogen Hub funding. A little over half of that was allocated to a multi-user pipeline from the Maitland Industrial Estate where we are, and the Port of Dampier where we want to go. That pipeline was either going to be ammonia or hydrogen, and it now looks extremely likely that it's going to be ammonia. So that when I say we're working with government around multi-user infrastructure, that's in particular what I mean.
All right, thank you. I reckon we've probably got about 3 left to go, Stephen. Angel is still quite early stage and is yet to receive a declaration for greenhouse gas storage formation. First carbon storage is probably 2031. Does this create a project risk?
I can't really comment on the specifics of the Angel timeline. Suffice to say that we've entered our MOU, all of us in good faith, and we're working towards an outcome that works for all. What I would say is all the signs we've seen is that Woodside and the Angel joint venture are absolutely committed to making this thing happen. It's an important part of decarbonising their business and meeting their safeguard mechanism commitments.
Yep. All right. Yep. Okay. I'm just going to read this one as it is. I was trying to cut it back, but the Greens inserted a provision in the hydrogen production tax credit legislation, effectively eliminating blue H2 from the subsidy. Do you agree? Do you think, given the election result, lobbying work can be done to change this, given there is no meaningful green H2 industry emerging for at least a decade?
Right. So a couple of things here. First of all, the economics that I've shared today assume no benefit from HPTI or any other government incentives. So any government incentives would be an improvement on that base case. Is the scope for a change in the parameters around some of these incentives? I like to think that there is, because the situation is evolving, and my personal perspective is that the current parameters around those incentives could result in a very high unit incentive being applied to a very small volume project, which means that the money's spent for very little kind of gain to the community. Whereas if there was a lower level of subsidy over a greater volume, that really could stimulate demand and stimulate investment in stuff that was competitive rather than a long way out of the money.
All right, I've got one last one. It probably leads on from that one pretty well. Is there a pathway for WH2 project to become even greener over time? For example, through increased renewable input or improved carbon capture?
The short answer is yes. and two ways to maybe look at this. So we're technology agnostic. We're not doing it the way we're doing because we don't like green electrons and electrolysis. It's because when you're economically rational, it just doesn't make sense at the moment to do it that way. When the price of renewable electricity comes down, there are a couple of things that we can do. Our plant design would allow us to take green electrons, put them through an electrolyzer, and increase the production of and use the hydrogen produced to increase the production of ammonia. So we could increase the capacity of phase one if we had affordable green electrons. So that's something that we can do as a little jump. In the longer term, at the moment, we're assuming phase two is a carbon copy of phase one, but it doesn't need to be. Depending on the cost of green electrons, phase two could have a varying degree of electrolysis included in it. And there's without going into the gory details, there's a few different ways to make that work, and it depends on the price of the electricity. So the short answer is we're open-minded, and whichever technology at the time provides the most cost-effective clean ammonia is the way that we want to go. And over time, we do want to see emissions reduced further and further.
Excellent. Thanks, Stephen. That wraps up today's session. We look forward to hearing more updates as WAH2 continues to advance. Thanks, everyone, again for joining.
Yeah, and look, thank you, Simon, and thanks everybody for taking the time to join. It's very much appreciated.